Most of the crypto software aren't very able to deal with the tax implications of interest rate accrual accounting. And so that creates difficulties for people that participate, because simply it's like, how do I just do my taxes right?
What is your biggest frustration when it comes to exiting cryptocurrency as it pertains to capital gains tax?
Yes, so there's two things about this. One is if you have an outright position in crypto, which is what you mentioned before, that is definitely a challenge for people that have huge appreciated assets. It's very difficult to get out without paying tax. And because the appreciation came so fast, there are even situations which people owe more tax than their net worth, right? If you're talking about Shiba coin or some of the other ones where it just goes parabolic and goes down 90%, right? So that is a very difficult one to manage. The other one is the fixed income aspect of it, right? So DeFi, which is kind of where we operate in, and that's the product we have, it's so fairly new that most of the crypto software aren't very able to deal with the tax implications of interest rate accrual accounting. And so that creates difficulties for people that participate, because simply it's like, how do I just do my taxes right? Right. So now when you talk about how much taxes, how do I even do it right? Right. So that is one challenge for people that invest in, especially like over collateralized lending, because you might be like, hey, look, I put 100 grand in there, right? And I make like 5 to 10% or something like that, which is pretty respectable, especially since it's daily liquidity. And now I was like, well, I don't know how to do my taxes. You have to pay an accountant 5 grand to do the taxes for you, right? And the benefit about our product is simply because with a promissory note, we give you a 1099 in the year. The taxes onus is on us and not on you, right? So we just say, hey, this is how much we paid you in interest, and then you just have this number. You put it into your end of year tax form, and you're done. And what better way to also save on taxes if you are able to put this in a tax deferred investment vehicle? Right. So I'm not super familiar with the sales trust that
Deferred Sales Trust. Yeah.
Deferred Sales Trust, but a common strategy is that a lot of people have self-directed IRAs, right? So you have those accounts where you have the flexibility to invest, and for fixed income product, that's kind of where the best place where you can get basically all the yield without any of the downsides.
Jackson, no, I love the way you say that, and it makes it simple with the 1099, the promissory note. In fact, we're like kind of like cousins in one sense. In our scenario, you can exit the crypto into actually transfer the crypto into a deferred sales trust, which is a part promissory note and part and it's an installment sales, what it is, and a part trust. Now from there, it can go into other assets, right? It can go into lending. It can go into real estate. It can go into the stock market. It can sit in the bank, and there's no timing restrictions. And so it's essentially what's happening is this trust is lending, or you're lending to the trust in exchange for a promissory note. Let's say you exit at 5 million of Bitcoin, you would have paid 1.85 in tax. And you're like, well, you know what? I want to delay that. I want to delay the tax, and I want it to live off the interest. And as you live off the interest, you likewise, you get a 1099 INT. Right. And it's really simple. All you do is get 1099 and you report it. And the first year you'll report as an installment sale. Right. But moving on, if you live off the interest, you're good. If you dip into principal, you pay cap gains tax. By the way, if anyone wants to learn about this, you can go to capitalgainstaxsolutions.com. It's capitalgainstaxsolutions.com.